phase one, strong demand, uptrend, rising volume, uptrend, natural gas. You can see where our trend started to begin. We start seeing this kind of staircase rise in volume. A rise in volume is confirming this uptrend. In this green candle and this red candle, we did get a peak volume, and that peak volume at that time was twice the daily average volume. We're going to look at this candle right here, this green candle, and now we're seeing volume is even rising even more. So this could be something very, very significant. So phase two, well, this is weak demand, and price tends to trend up. Volume is starting to fall, or volume is starting to wane. And this is a sign of our uptrend is weakening. And we can see that price is rising. It's trending higher. Our volume is decreasing, or it's below that baseline. You know, we have this peak volume where the price bottomed, and then from that point on, what did we see? Low volume. So we have an uptrend, but we don't have strength to this uptrend. We don't have conviction to this uptrend. And so this is a weak trend. Price was allowed to rally on light volume. There wasn't a lot of resistance. If we look to the left of this rally, we don't really see any real structure. Plus, the structure we do see is related to very low volume, no conviction, right? Nobody really cares about price in this range. But notice that price did rally, and where did it stop? Again, if I look to the left and I look at volume as an indicator of price conviction, notice we see a large amount of volume being generated in this region. This is kind of an area of resistance. For supply and demand traders who understand what supply and demand represents, here's a drop-based drop, a very strong area of resistance. So price was allowed to rally up until it found a price of conviction. How do we know it's a price of conviction? By the volume that was created during the time of that price action. So volume can also tell us the strength of a trend, but it also helps, again, validate our price. Phase three, strong supply. Now, this is where our price trend is down, downtrend, and our rising volume. Our downtrend is now being confirmed. So again, we're in phase three. We're in a strong supply cycle, and we're in a downtrend on rising volume. And again, here we can see that. Here's our downtrend, and here's our rising volume. Again, notice how we get that staircase of volume as we are transitioning on our price trend. Continue to fall, volume continue to rise, and then we get another peak volume. And again, this is where we see the end of our price movement. Now, it doesn't mean that it's the end of the trend. It just means that price is not going to move any farther from here. It needs to either gather strength and then maybe new volume to push it lower, or a lot of times we'll see is a reversal in price. Again, we'll talk about peak volume in a bit. But again, what it was, one of the things that we talked about in terms of validating price, that consolidation tends to find falling volume. And so if we look at this price action right here, this consolidation came on very light volume. Now, if we look at this in hindsight, in terms of the big picture, this area of consolidation of low volume was also where the market was attempting to make a new high. And we didn't get an enthusiasm and an emotion of new volume to make a new high. And that would have been a warning sign to us that something was about to happen. And in most cases, whatever new volume came in will dictate the next trend. And that's exactly what we saw, a rise in volume on a downward price action in the beginning of a strong supply cycle. And then finally, phase 4 is weak supply. And so weak supply comes usually after a major downtrend, but a downtrend on falling volume is telling us that that downtrend is weakening. So phase 4 is weak supply, downtrend on falling volume, no conviction, right? Sometimes referred to as kind of a dull market. Now look at this price action. Again, I want you to concentrate on the price action that's inside of this pink box. This price action, right? This is a really nice trend. I mean, if you were looking at this, this trend is in control. There's a lot of lower highs and lower lows, which defines a downtrend. But notice that our volume is declining. So price is trending, but there's no conviction behind this trend. And so that when price comes to retest this trend, then price is going to fail. In other words, there's no validation to it. Now, if we have an up day, in other words, the price of the market closes above the previous day's price, an up day, then the volume bars will be green. In other words, up volume. Market moved up, then we're going to categorize that volume as up volume. If the market price is lower than the previous day's close, then that would be determined as a down volume day. And so you would have a red candle. We have a red candle for our candle, but we have a green volume bar. So something's going on here. What is going on? So on candlesticks, we do have a choice of different types of candlesticks. The more common use of candlesticks is the open to close. What we want to see is what does that price action that is represented by that one candle. So if a candle opens up lower and closes higher, that would represent an up candle or a green candle. But in this case, price opened up higher and closed lower. Therefore, this is a red candle, a down candle. The price action for that particular day is showing me that there was selling pressure in that candle. But if I change my candlesticks to close, now my candles will be related from the previous day's candle. In other words, notice how my red candle now turns green because here is the close of the previous day. And even though the selling pressure we saw on the open to close candle, the price of this candle still closed above the previous day's candle. That's why it would be green instead of being red. But this is significant, isn't it, right? We have a selling pressure on an up volume day. It's kind of telling us that bears are trying to get back in control. Maybe we are starting to see a conviction. Now, the next day, what happened? Price fell, right? We do see a red candle, and we do get a red volume bar. In other words, price did close lower. But our volume is a lot less than our previous day volume. Here, volume is contradicting this price pressure, this selling pressure. If we really thought bears were in control, what would we want to see? We would want to see this volume be a spike volume or an increase in volume, certainly above the volume that we saw from the previous day. Now, the next day, what do we see? Well, we got an up candle on up volume, and not only up volume, but this volume was above the selling pressure of the previous 2 days. So this is a clear sign to us that not only do we see an excitement of price action, on volume, an increasement of volume, and that could be the sign of a new trend. And now notice what happened with price. Well, it did gap higher the next day, and this could be the beginning of a new trend. Price action shot up, right? Shot up, and again, we got this big spike in volume as either shorts that were in the market got trapped, or maybe this new conviction of buying IBM. After we got this spike in volume, what did our volume do? It dropped dramatically, right? Again, an area of consolidation, falling volume. If we really believe this was the beginning of a new trend, what would we anticipate? We would anticipate our volume to continue to rise, right? So we're not really getting that conviction. What we're really getting is kind of a knee-jerk reaction to earnings. Why did price stop right here? Why did it run up and then stop? Well, if we go over to the left, this is a very strong reversal candle, reversal price candle. And this candle is called a gravestone. It's a kind of a doji, a battle of indecision, but with selling pressure. And notice that we do see some significant volume. So there's something definitely going on here. And so not to trick you or confuse you. Okay, so here we are, January 5th, and we're in an hourly chart. And again, what type of candlestick pattern do we see? Those of you who aren't familiar with candlestick patterns, well, this is called a tweezer top, and this is another reversal pattern. But this is a reversal pattern that's happening at the hourly time frame. And notice that price did what? Fell away dramatically. It fell away on what? Volume. Who's in control? Sellers are now in control. Price rallied to the last point where price was validated by volume. It literally was by a penny. It came right to that tweezer top by a penny. And then what did price do? It stops, and now it's kind of basing. Now, if I believe this is the beginning of a new uptrend over the next day, I want to start seeing volume increase. But if I see volume falling, as we're seeing today, we're in a consolidation pattern. And so whatever volume comes will dictate the next trend. And my guess is that we'll probably break this support level right here and come back and fill this gap, maybe on a higher volume event.